Welcome to my viewers. Today I want to talk about the distinction between a partnership, a joint venture, a sole proprietor, and a company. Now, when you're deciding to start trading, you need to decide, do you want to actually form a company, register a company? Now, a company will have directors, it will have shareholders. Directors can simply be those that are involved in the day-to-day running of the company. They appear on the company registration document, but they are not necessarily the shareholders. Shareholders are the owners of the company. Now, you do not necessarily have to have the same person who is a director holding shares in the company. That can be separate. In most cases, however, your directors are also your shareholders. Now, the second form of entity we want to talk about is the sole proprietor. This does not need to be registered at CIPC. So you just wake up in the morning and decide, okay, well, I'm going to trade as Caroline. All you do is you have your bank account, your personal bank account, you're trading your consultancy account, and you trade. However, the tax rate would be very high because you would be taxed at the rate of an individual, which are on a sliding scale, not on a fixed rate of 27%. The third option we're going to talk about is a partnership. Now, it's similar to a sole proprietorship in the sense that you do not register it at CIPC. A partnership is simply two or more people coming together and forming a union to trade. At the end of the financial year, they would then share the profits, usually equally, depending on the partnership agreement, and disclose whatever profits they have made in their personal capacities, in their personal tax returns, and pay the tax accordingly separately. Joint ventures are similar, although not quite the same, in the sense that you would also form a joint venture, possibly between companies or between individuals, for the sole purpose of conducting some form of trade. Again, profits would be shared and taxes would be levied on the individual joint venture members at the rate of whether it's a company in the joint venture or an individual in the joint venture. Today, those are the types of entities that I would like to discuss with you. Within the company structure, however, just to note, there could be a PTY limited, which is a proprietary limited, or there could be an INC, which is a different entity usually used for attorneys, which are lawyers, doctors, accountants, and those are specific in their field. Then you can have a non-profit company. Okay, that is the other type of company that you can register at CIPC. All of these are subject to the same rate of tax, which is 27%, a fixed rate. However, should you be a holder of just one company and you hold specific requirements that apply to what we call the small business corporation, your turnover is below 10 million, for instance, you would then be able to have a certain portion of your profit tax-free, and the rest taxed at a lower rate than the 27%. Join me or contact us for further information on the above.